Hello and good evening. Uh, it's it's September, the beginning of September. I wish you all a great month. Welcome to the Business and Banking Dialogue show. Today and going forward, we will have the show at 6 p.m. Instead of 3 p.m. And so this is the first of the show. I hope this change of time will be beneficial to one and all, especially those who have started going to office and afternoon was inconvenient when they are in the office. So this new time in the evening will also help them to participate. And we did get a lot of requests to look at alternate timing. And so we have tried to do that. Hopefully, a lot more participants will be able to watch our show. I'm KK, your moderator for this show. As usual, we are live in EPS and social media channels, namely YouTube, Twitter, Facebook, and LinkedIn. So, ladies and gentlemen, today let's begin our show, the 1st of September at 6 p.m. Okay, so let's begin our show. So, ladies and gentlemen, India's economy posted its steepest contraction on record in the April-June quarter of the current fiscal year, as the strict lockdowns imposed to ward off the spread of the deadly coronavirus infection stalled economic activity, shut out consumption and investment, and led to job and income losses. Except agriculture, all sectors were done, leading to record negative GDP of 23%. I mean, negative 23%, minus 23%, unheard of. That's a massive contraction, but something we all knew with the economic shutdown due to COVID. So what do we do to the target of 5 trillion? And that's the topic of today. The topic of the today as is transforming banking for a 5 trillion economy. So how do we reach that 5 trillion? Is it possible? Yes, no. How to avoid? How to go forward? What steps that we need to be taken, etc. We will discuss, and we will find out from our guest today. Our guest is none other than Ms T Latha. She has come on the show before. So let me give you a brief about Ms. Latha. Srimati T Latha is a former MD and CEO of Dhanlaxmi Bank. Under her leadership, the loss-making bank made profit for 5 consecutive quarters. She also steered the bank clear of PCA framework. Prior to the Dhanlaxmi Bank, Srimati T Latha was in PNB, where she held various responsibilities, including regional management and credit management and handling portfolio close to 40,000 crores. That's massive. As a general manager in PNB, Latha was also in charge of credit operations with large corporate credits. That's what is required in today. Large corporate credits and of course demand for those credits, which will propel. So she's the right person to talk to and figure out how is it that India can reach the 5 trillion mark. So let's get going. You can read her profile right in front of you. Good evening, madam, and a very warm welcome to our show.
Good evening. Thanks to you for inviting me to this show to be a part of the panelist.
Thank you, ma'am. You're most welcome. Ma'am, last time, if you remember, you appeared just a couple of hours before the RBI, couple of hours after the RBI governor announced the MPC recommendations, Monetary Policy Committee recommendations to revive the business and economy. Today, you're appearing barely 24 hours after the GDP figures of last quarter have been announced, dismal negative 23% down. So ma'am, given that the government did not factor in the deepest economic shock when they pegged in the target of 5 trillion economy in 2024. This target was put by the Prime Minister much before the COVID came into being. We didn't even know what COVID was those days. What is your view that 6 months after the crisis, is this still an attainable goal, or chase of a utopian dream?
See, let's put it this way. Pre-COVID also, this was a very, very difficult target to achieve, but because you had to achieve minimum a CAGR of 14 to 15% if you had to reach a $5 trillion economy, $5 trillion economy by 2024-25. The pandemic, of course, has created a huge issue, as we are aware that the GDP has shown there's an absolute negative growth of 23.9%, and all sectors like manufacturing, etc., have shown nearly a downfall of more than 40%. And only agri, which has shown a very, very minimal increase of about 3.2%. I think the government definitely has to go back to the drawing board. I mean, it's not that $5 trillion economy is not achievable, but I think the government has to go back to the drawing board. The economic advisors have to go back to the drawing board to change the date. Because in order to achieve $5 trillion economy with this kind of scenario, it is just, I mean, it will be an utopian dream, or we'll be living in a false paradise saying that, yeah, we are definitely confident of achieving it. I mean, it's possible, of course, if I have to compulsory achieve it, I can always say my dollar rate is only $50 a rupee. I mean, 50 rupees a dollar, and then I say I achieve a $5 trillion economy, but that is not the criteria. The criteria is to achieve it, but the date has to get changed. For that, there is a lot of work to be done, not only for improving the GDP, but also to ensure that we are out of this pandemic, because nobody at this point of time is even sure as to when this pandemic is going to get over. Maybe we can discuss the various ways of the banks or how the government can come forward to ensure that there is hope that maybe if not 2024, shortly will happen. Yesterday we heard the chief economic advisor even stating that there is bound to be a V-shaped recovery. Now, if that V-shaped recovery takes place, definitely there is a lot of hope that it will take place, V-shaped recovery will take place, and we will definitely be able to achieve, if not a $5 trillion economy by 2024, maybe around a $4 trillion economy by 2024, and maybe within a couple of years after that reach the $5 trillion economy, which has been the target which has been set about 2 years back.
Okay, so even achieving 2024 4 trillion, I think that will also be commendable, given that this quarter is last quarter is down. This quarter this quarter also doesn't look too good, excepting some opening up of various activities.
Yeah, I agree.
So I think if you say that by 2024 a 4 is what we should, I think perhaps we should change our target that by 2024 we will make it 4 trillion.
We should try. I mean, that's what I'm saying. They have to go back to the drawing board and really reassess the entire situation to see what exactly is practically possible. Because sticking to a target of $5 trillion, which we know at this point of time is next to impossible. Because whatever you may say, that to come out of this negative growth itself is going to take minimum a year. Because 23.9% negative growth to come back to positive itself is going to take a huge time. And there are a lot of other work, because if you see today, even the various industries, even lockdowns are still continuing in various places. So the economy is still not on the original track on which it was expected to be running. All these have to be considered. I think the government definitely has to go back to the drawing board, and we all hope that there will be a V-shaped recovery, which will be good sign for the country. Because if you see, other than USA, which has shown a shrinking of nearly 31% in the GDP, others are all having a negative growth of say 12%, 15%, 16%, except China, of course, which has been showing a positive growth, which is quite surprising when they also had a huge pandemic. But I think we have to factor that in, and then definitely we have to change our timelines. Otherwise, it is just not going to work out at all.
True. I thought UK also was close to 16 or 17%.
Yeah, exactly.
Down. Yeah. So China, of course, we cannot say anything because we don't know what comes out of that place. Okay. So let's when pushed to the wall, we are being pushed to the wall. There's no doubt about it. India has achieved the most difficult of the tasks in a shorter period compared to some of the developed countries. India's track record in developing instant payment rails, building world-class intercity express, operationalizing 34 airports has been fast and quick. What are the three focus areas of banking transformation which can keep alive India's quest for a 5 trillion economy?
Yeah. There are a lot of things which the banking sector can do, and it is doing, no doubt, to keep this alive, this quest of $5 trillion. And without the banking support, I don't think anyone can even dream of reaching this $5 trillion economy. First and foremost is what was expected and which happened is the amalgamation of the banks, because we needed a bank which was, a few banks which are in the top 100 of the entire world. If you see, China has more than 12 banks which are in the top 100. Japan now has 7. Earlier they had about 18 or 19. And India has only one bank, which is State Bank of India, and that too, which is in the 55th in the world ranking. So we need to have more banks. And in order to have, more banks which will be in the top 100, the government has already merged about 12 banks, about 10 banks into 4 banks. And now we only have 12 banks and not 27 banks, which was there earlier. These 4 banks, which have been now amalgamated, are standing number 2 in the Indian economy, number 2, 5, 6, etc. So they have to really ensure, because earlier what was happening is that they were not able to, some of the smaller banks like Vijaya Bank, Andhra Bank, they were not able to give substantial amount of loans to the various borrowers who are needing it because of the capital issues, because of their risk appetite. Now that these banks have got merged with large banks like Punjab National Bank, Union Bank, Canara Bank, I think the risk appetite is going to be much more. And because in order to come to a 5 trillion economy, you need to create wealth. Now that wealth creation can happen by the private investment, by the public investment, by maybe foreign investment. But in spite of all this, you need to have banks which will be in a position to support this economy to take it forward. This economy can be in the form of credit to the MSMEs. It can be in the form of exports. It can be for agri, for any corporates. But that is one of the major things which are required. Secondly, these banks which have got merged, I would say, amalgamated, also will, one of the major things which they have to do for giving this big push to the 5 trillion economy is to ensure that the digital banking and the last mile banking takes place. Because unless and until everybody in this country is involved in this, it is not going to happen, because our major sectors are all in the rural, and the rural sector has to play a major role. Similarly, our MSME sectors have to play a major role. And these are some of the things which the banks have to take into consideration, where the banks have to proactively go forward to ensure that there is substantial, not only credit, you have to even guide these people, because sometimes they may not even be aware how the credit has to be taken, how the exports are to be done. So you have to do a lot of hand holding also. And these challenges are something I think the banks have always been able to take it. And now that it has become a much bigger organization, I think it's not at all going to be a tough job for them. It will be much more easier for them to take this economy. And but for them, I don't think it is going to be possible for any country to take their economy to a much larger level, and for the Indian economy to reach a 5 trillion mark by 2024, 2026, 2027, whatever is the date which we are planning to. I think the banks will have to take it forward, and the banks are capable of taking it forward. I'm talking of both public sector and private sector banks. They have to go hand in hand. It's not only the public sector banks, or it's not only the private sector banks. Both the banks have to, both the institutes, along with the various NBFCs, of course, will have to take it forward.
So, we have heard many of the experts who have come to the show have said one important factor is that the public sector bank and the private sector bank cannot reach the last mile. And you talked about the last mile very effectively. I think it is absolutely important that they collaborate with the NBFCs and the many cooperative institutions that we have to create a massive, gigantic, initiative or a project such that we can reach the last mile. Do you see, because NBFCs have always been kept apart, saying that they are like too much of a risk. Should that attitude change?
Yeah, that attitude should definitely change, because unless, see, they are, as I told you, they are able to reach the last mile people much faster than a public sector bank or a private sector bank is able to reach. Maybe you can put in some mitigants, risk mitigants, in order to ensure that they don't default. The NBSs themselves don't default. In fact, I think the policy of the RBI is also that the NBFCs can be given banking licenses to some extent. But I think
Yeah.
there are a lot of mitigants in that, and that's one of the reasons they're not able to take it forward. And I think some big NBFCs should be permitted to form their own private banks, of course, with a lot of regulations. I think which any bank is now following. All the regulations can be put in place for them also to ensure that there is a proper coordinates and proper risk mitigation, and the last mile connectivity can then be 100% complete.
Yes, yeah. Yeah, it need not be a bank. I mean, the bank is just a name. Any financial
Exactly.
institution coming under the purview of Reserve Bank of India, following the laws of the country,
Exactly.
and can play a big role in going forward. Uh, so, so ladies and gentlemen, this is a very interesting topic. 5 trillion economy, which is the target to which the Prime Minister of India, Mr. Modi, had across. Yeah, we are in a black swan period, so that target looks pretty elusive at this time, and we will have to find a way, and that's what we are discussing with Srimati Latha, how to go about it. I'm sure you have a lot of questions. You have a lot of observations as to what's happening and what should be done. So please feel free to put your questions or your observations in the Q&A box, and I will try to get it across as much as possible to Srimati Latha and try to get those answers. Should you want to talk to her directly, you could do that also. You could raise your hand and ask a question, and the digital team will give you the right time where you can unmute yourself and ask the question. And I'm sure Srimati Latha will give you those answers. So let me move on. So you did talk about amalgamation, ma'am. Okay. Amalgamation and consolidation will help Indian banks scale to a global size bank, which is what you said. Because currently we are only one bank, SBI, and that too, it's on the 55th number in the second half. So we are nowhere, although we are a giant company, giant of a country. Okay. So the amalgamation and consolidation, which can provide capital to large infrastructure projects, will drive economic growth. So I have, about 4 or 5 of them. So I may ask you those kind of questions. Could be rapid round questions. What are the limitations of the existing banking system?
See, there are quite a few limitations of the existing banking system, especially in the public sector banking system, I would say, is that even though there is an amalgamation, but then see, if you see today also, the public banking system is under dual regulations. The regulations of RBI work, we are also under the regulation of the Department of the Financial Services. So it becomes a little difficult for a bank to have the kind of an autonomy which they would really like to take it forward. Secondly, with this amalgamation all said and done, the amalgamation, no doubt, is a good amalgamation, but it is not really gone to that extent, because you are going to have excess manpower. You're going to have excess branches. What do we do with those excess branches which we have? Because, the merger of Punjab National Bank, the merger of OBC, okay, United Bank of India is a Calcutta-based bank, but both OBC and Punjab National Bank, or Canara Bank and Syndicate Bank, they're all from more or less the same place. So if you take a bank of Punjab National Bank, if you go to Bombay, Fort area, already Punjab National Bank had about 7 or 8 branches. OBC has about 7 or 8 branches. Similarly, go to South, Canara Bank and Syndicate Bank have a huge network. So, to merge these is going to be a major issue, because you can't have 2 branches in the same area, in the same locality. It is not going to be very feasible. Secondly, most of the banks, if you see, these banks which are merged, they have all given advance to the same customers. If you take the top 100 accounts of these banks, at least 40 to 50% will be to the same customer.
Yeah.
So it is not going to really, maybe it will help them maybe to deal with those accounts in a much better way. That's all. But again, whether that will help in reduction of your NPAs, whether that will help in reduction of the capital, because capital again is a huge amount, which of course the government has agreed to capitalize to the extent of about 55,000 crores of rupees, not only to these banks, to the other banks also. So capital is a major issue, and the government holding has to drastically come down if these banks which are amalgamated or the banks which are also not amalgamated have to really perform to the best possible extent, because they need a lot of autonomy. Like the private banks have the autonomy, the public sector banks don't have the autonomy. That is one major drawback for a public sector bank.
Okay. So we'll talk about the autonomy, because that itself is and it's a very important factor that you bring up. So you brought out a very interesting aspect that the customers are the same. Okay. Because so many of the banks would have lent to the same customer, and now they are amalgamated. These banks are amalgamated. So instead of a spread of NPA with 4 or 5 banks, you suddenly have one bank saying that I own all these NPAs. So it will be like a huge balloon that is, which was small balloons, has suddenly become a big balloon by itself. So is that a issue, or will that be a major factor in de-accelerating whatever the good intentions are?
No, I wouldn't say that, because it has its plus point. Because if a decision had to be taken, say whether it is for an IBC or whether for going for a resolution, instead of 4 banks discussing the same account, one bank which has got all the 4 banks account with it, or 3 banks account with it, will be in a much better position to take a decision. And I think that way the resolution will be much faster. They do not have to depend on too many people. They don't have to go to see earlier, supposing X account is there with Punjab National Bank, OBC, United Bank of India. All the 3 banks have to go to the respective boards for their permission. Today it is only going to be 1 board. So the time taken is going to be much faster in the resolution of these accounts. So that is a major plus point, no doubt on that. But only thing is your percentage of NPA will not come down. What I was trying to say is that, thinking that my credit figures will go up, correspondingly my NPA figures go up. So the percentage of the gross NPAs or the net NPAs will more or less remain the same even after the amalgamation, unless we go for a drastic recovery. And if that happens, of course, the percentage will come down.
Okay. My second query to you on the amalgamation and consolidation is, what are the results of the amalgamation that is in progress? What's the status? If you could just tell our viewers.
See, there has been a lot of advantages of this amalgamation, because if you see that Punjab National Bank, OBC, after merger has become the second largest bank after State Bank of India. State Bank has more than 35 lakh crores of business. And now these 3 banks, this Punjab National Bank, the consolidated figure comes to 18 lakh crores. And then you have Syndicate Bank and Canara Bank, which comes to the 5th position with a 13 lakh crore business. And Union Bank has got the 6th position with a more than 12 lakh crore business. So this definitely is a plus point, because if you have to be in the top 100, because as we said, State Bank is 55th. So in order that we also have to come to that level, in order to be in the top 100, you need to have much bigger banks. So that is one of the major plus points. And these banks, as I said, will have the wherewithal and the capacity to lend more, because it is going to be one bank lending now. So the total figures of lending, the total figures of deposits, everything will go up. So maybe in a period of a couple of years' time, this 18 lakh crores, I don't know what is the target given by the respective banks, can substantially improve, that we can also think of at least having 2 or 3 more banks in the top 100 banks.
Yeah. So is for the view of our perspective of viewers, is the amalgamation all complete in all sense, or it's still going on?
No, the amalgamation is effective with 1st April 2020. As on 31st of March 2020, each bank had made its separate balance sheet. As on 1st April, the balance sheet has been plugged. The financials have been plugged. But yes, there are certain teething problems for the customers, I would say, which will be there for another 6 months to 1 year, because the customer of A bank will not still be able to go to the B bank that is, Punjab National Bank customer may not be able to go to the OBC bank for any and every of his transaction, like his duty drawback or for any of those things. He has to deal with Punjab National Bank only. But that will take a little time. Secondly, amalgamation financially, though it has taken place, but there are a lot of small issues regarding the HR issues, the branch reorganization, the circle reorganizations. All these are, because a lot of verticals have to be set up. So these are taking time. But overall, financially, yes. As on 1st of April, the balance sheet has been merged, and whatever figures now come out is a consolidated figure. I mean, the quarterly results also, which have been declared by the various banks, is based on the consolidated figures of the banks.
Okay, that's nice. So actually, my third question was, what should be the approach for amalgamation? You have already mentioned already. Is there anything else that you would like to mention? What should be the approach for amalgamation?
Yeah,
are we on the right track?
We are quite a bit on the right track, but then we have to do much more, because we have to have more of corporate governance. We have to have, as I said, the autonomy. See, one reason what I was talking of the autonomy is, if you see today a public sector MD and CEO, and you take a private sector, I'm not trying to compare or try to find, reasons for the thing. You see, even the pay scale, everything, there is a difference, with huge difference. Today,
Yes.
if from a public sector bank, as an ex-banker, I can tell you, if I have to go and recruit someone, I will not be able to go to the A group, the Indian Institute of Managements. For the simple reason is, the pay scale which I can offer to them is not what they will be interested in.
Yes.
Secondly, the question is that, even let us presume, though the government says we give you the autonomy for a one time to recruit at a slightly higher pay, but once he comes into my organization, he has to follow the same rule, that he has to wait for his 5 years for his promotion, he has to be 7 years for his promotion, whatever it is. The public sector banks do not have that liberty or the leverage of choosing people at their choice. They don't have the leverage of giving any out-of-turn promotion, out-of-turn incentives. These are certain restrictions of the public sector banks. Unless and until these restrictions are eased out to a large extent, it is going to be difficult. Of course, there will be a school of thought which will say that banking is more or less a mundane kind of a job. Why do you need experts in it? But there are a lot of areas like your treasury, your investment, your risk, your credit assessment, your top management. All these are areas which require a lot of expertise. And if you need somebody to come in at a lateral stage, you need to have that kind of a freedom given to the banking sector to recruit them, to train them, and then take it forward. Once these facilities are given, I think public sector banks will be one of the best in the entire country.
True, very true. I think from a talent point of view, the best of talent is available with the public sector banks. I have dealt with many public sector banks. I think they know what banking is. They know the business. Perhaps what you said, the autonomy that they require is due right now, and I think I hope it reaches what you're saying, reaches the ears of the people who make such decisions.
See, in fact, if you see,
Yeah.
the good people who are there in the public sector banks, especially at a young age, the risk person, the treasury person, the investment person, generally after getting the experience of 5 to 6 years from a public sector bank, go and join an NBFC or go and join a private sector bank at a higher position and a higher salary. So actually, we are having a lot of attrition of good people in a public sector bank.
Yeah, true. So let's look at a different dimension of amalgamation. You talked about public sector banks getting merged with public sector banks. Yeah, definitely that's good. At least we have then 4 banks, and for 4 big banks who can reach the top, or at least try to become one of the top 10 or top 50 of the world. But look at the other sectors of the banking side. You have the private sector, you have the cooperative banks, you have the district cooperative banks, you have the primary cooperative banks, so many of them. Why nothing is being done to consolidate them? I mean, that is where your last mile is, and that area is not being addressed.
See, as far as the private sector banks are concerned, if a bank is really doing very well, they would not like to take over another bank which is not doing too well. See, in public sector banks, the government can see earlier, if you remember, a year and a half back, the government had said it's up to the banks both to decide which banks they want to merge with or which banks they want to take with them. But ultimately, the government only decided that these are the banks to get merged. Whereas in the private sector, it is not like that. There have been cases of private sector banks also getting, amalgamated. Like you had the Lord Krishna Bank, you had the ING Vaishya merging with Kotak Bank, you had Lord Krishna merging with Centurion Bank, which in turn merged with HDFC Bank. But there are very few cases. In fact, if you know Lakshmi Vilas Bank, they India Bulls wanted to take over the Lakshmi Vilas Bank, but in the last after a lot of due diligence and all that, Reserve Bank did not give them the permission. So private banks merging has to be on their own. Of course, RBI does have a few regulations, but by and large, it's only the big private banks which are there. They would not like, I mean, they're all very well to do, I mean, very well capitalized and they don't have any issues. Smaller banks, they resist because they don't want to lose their entity, frankly speaking. And I don't think Reserve Bank would like to interfere in it unless there's something which is majorly going wrong in those banks. As far as the cooperative banks are concerned, first and foremost, they don't directly come under the Reserve Bank for a lot of reasons. They are mostly
but now they do, right?
Though Reserve Bank is now trying to say that, yes, they also have a right to this thing. But see, cooperative banks are basically each one will have maximum 4 or 5 branches, except for few cooperative banks which have got more branches. But most of them are restricted to a particular village or a particular district or a particular state. To merge that particular branch with, it's going to be very difficult. And they basically are into, mostly if you see the cooperative banks don't go into the corporate lending. They go more into the agri and the MSME lending, which is the need of the hour for those people. And they do have a tie-up with the public sector banks as far as the credit facilities are concerned. Most of the cooperative banks have a tie-up with the banks. It's not that they don't have a tie-up with the public sector banks or the private banks for the credit facility which they want, or a line of credit which they want, or a guarantees which they want. That is all there. But merger, I don't think is going to work out for these cooperative sector banks.
Okay. So if I may just, so since I work quite a lot with these banks, if I must say, let's look at these, because I'm talking of the last mile connectivity. If you look at the district cooperative banks, they are quite a lot. Every district there is a cooperative bank, right? And their branches are quite a lot of hundreds. Each bank is at least 100. Average would be about 50, 60 branches. Why do we need so many district cooperative banks? Why can't we have for a state one district bank, such that you have one, they have also a bank by itself, one big bank?
No, I agree. But then who is going to see? The question is, each cooperative bank is run by a few individuals or by the village who contribute the share capital. If you're going to have one large district cooperative bank, you're not going to get people from some other village contributing to that. I mean, the chances are difficult. That is what I'm trying to say. It's not that it is not practical or it is not possible. It is very much possible and very much feasible also. But I think there's a lot of work to be done on that. And again, the people of, say, Sangli may not be very comfortable in dealing with a bank of Pune or a bank of Kolhapur. They prefer to deal with a Sangli cooperative bank because they feel the comfort level which they will have with that bank will not be there with that of a Pune or a Kolhapur.
Yeah. No, maybe we should call it Maharashtra Bank. Finished. That's it.
Exactly.
So there is no question of. Okay, ladies and gentlemen, I think we are this very interesting discussion that I'm having with Latha. I hope you are also enjoying it from a 5 trillion economy. Do send in your questions. Do send in your queries, and I will try to get this across to Madam as soon as possible. So, ma'am, there is one question that has come across from gentleman Goel. He says, investment, especially private investment, is the key driver that drives demand, creates capacity, increases labor productivity, and introduces new technology, and allows creative destruction and generates jobs. How important are these factors? The private investment, how important is this factor?
A private investment is one of the most important things for if the country has to achieve a 5 trillion economy. As I said
Yeah,
initially itself, it is a private investment, it is a foreign investment, and it is a public investment. All the three are most important. The private investment is most important because they are able to create so much of industry, so much of jobs, and that in turn will ensure that the economic cycle continues, which will be not only a wealth creator, they will also be in a position to distribute the wealth to the various people. The private investments will also, the big private players I'm talking of, will have the capacity to generate more investment by their own funding. So they don't have to depend on XYZ to fund them. And that will definitely help in the economy to grow. There is no doubt on that, that private investment is a must. But only thing we should also ensure that to reach this 5 trillion economy, we just don't depend on a handful of the private investors.
yeah,
Because then you are going to concentrate the wealth only in the handful of these private investors, whereas it should, along with being a wealth creation, which is what the government has been talking of, I think wealth distribution, that is every individual who is contributing in some way or the other should also get the benefit out of it. It's not only wealth creation, it should also be a wealth distribution, I feel.
yeah, very true. Absolutely. Wealth distribution is extremely important. I have another question, which is, I think, opening up a new way of looking at things, especially in this pandemic, where there are sectors in which there are major hits, like for example the hospitality industry, the real estate industry. So the observation and the question that has come forth is that why don't we create sectoral banks such that there are specialists of that industry in that particular bank, those kind of banks, and they deal directly with those kind of sectors. Like if I may add on to that, if it's a sectoral bank, let's say for hospitality, then they're specialized in that. Like your payments bank, you're specialized in that, and you deal with them and kind of ensure that they get quick credit, their processing is faster, and that way you are creating sectors in which your credit demand and credit supply are quicker than perhaps in the one bank serving all sectors. Your thoughts?
No, I'll slightly differ in that for the simple reason.
Yeah.
Though the bank may be one, but I think if you notice in a bank, whether it's a public bank, public sector bank, or a private bank, there are various divisions. There are various other industry officers also. There is a separate, it's not that one loans officer does for a hotel industry as well as he does for agriculture or he does for MSME. There are various credit desks, and each credit desk is manned by people who are expert in that particular field. Like if you go to a Punjab National Bank, like I'm just telling you, for the corporate office, which is dealing with the big borrowers, you have a separate credit team which deals with power, a separate team deals with infrastructure, a separate team which deals with this hotel industry, separate team which deals with, I would say, there's hospitality, your schools, your colleges. Because as I agree with the gentleman who has raised this question is, because a person who's dealing with MSME will not know what are the guidelines which are required to run a hotel industry, what is a time frame in which a hotel industry can reach is uh, what should I say, break even point, because it's not like a small industry which will reach a break even point in a couple of years time or 3 years time. He will need about say 7 to 8 years to reach his break even point. So the time given to him to repay the entire loan should be over a period of 10 to 12 years, not which a branch manager will say it has to be paid in 3 years time. But every bank, I will say, I'm not talking only one bank, every bank has a inbuilt system that the respective sector is dealt by the sectoral managers who are experts in that. So I don't think we need to have a sectoral bank as such for that.
Okay. Fine. I think it's just observation.
Yeah, that's all.
I think it's a good observation, and perhaps something we can look at in a larger debate. So, ladies and gentlemen, please, we had some very good questions, and we got equally good answers from Srimati Latha. Please send in your queries quickly. We are almost just our 20 minutes to end the show. So let's not wait for the last minute. Please send in your questions right away, and I can ask the same questions to her. Ma'am, let's look at the cleaning of banks' balance sheet. It's a prerequisite for amalgamation of banks. Okay, implementation of insolvency and IBC bankruptcy code has been a game changer. India's ranking in the latest World Bank doing business report in resolving insolvency category has jumped to 752 from 108. More than a 50 points jump. However, a lot needs to be done. What is the road ahead?
See, as you said, really, that it's very correct that actually the bank's cleaning of the balance sheet started during the year 2015 onwards, when the AQR was introduced, the asset quality review was introduced, and a lot of balance sheets have been, quite a bit have been cleaned up. But it is still not complete because a lot of other small issues are there. If you see, actually, many industries which are there, which we have not been able to clean up for various reasons. If anybody looks at bank's balance sheet, the agriculture industry which is there, we generally don't show them as NPAs very rarely because we just keep renewing it. But actually, it's a hidden asset which can boomerang at any point of time to an NPA. Because many of the people who have been given the KCC, that is a Kisan Credit Card, have used it for consumption purpose and not really for the agriculture purpose. And because there's a lot of trust on the banks, particularly the public sector banks, that they have to do these agri loans, MSME loans, it is going to be a real issue. Now, coming again to the MSMEs, this pandemic has really thrown the business of the MSME completely haywire. They just don't know where they are. We may say there's a lot of restructuring which has been given to them, there has been a lot of incentives given to them, but that hasn't really helped them. The incentives given to them are in the form of government guarantees which they can take collateral-free loans. But what the MSME person is saying is, I need the money to pay my workers, I need the money to pay rent, I need the money to pay electricity. But if you are giving me only a fresh loan, which I have to repay, and today there is no sufficient demand for me to generate that kind of a business to supply and repay, even if I get a moratorium, I will find it extremely difficult to repay these kind of loans. So actually there is a worry not only with the customer, with also the banks, that maybe in a couple of years' time, the NPAs may increase because it is going to be very difficult for these kind of borrowers to repay the loans immediately.
Sorry, yeah. Ladies and gentlemen, sorry if you're getting some disturbance. There is some empathy, emotion procession going, so sorry about it. Thanks, Sata. That was what you talked about the IBC. I think there is still it's done a good job, but I think there's still a lot more to come. We talked about MSC sector, so let me ask you this question on the agriculture and MSME sector. Both are, as we all know, and we have many subject matter experts have said this, they are the most important for the growth of the economy. What changes do you recommend in the current banking system so that we stay course on achieving the target?
Yeah, see, as I said, as far as the MSME sector particularly is concerned, because agri is not so much affected by this pandemic as the MSME is affected, there's a lot which needs to be done to help the MSME to come out of their problem. There is a feeling that the bank should reduce the rate of interest to them. But again, the bank is a commercial organization. If the banks reduce the rate of interest, then the banks are going to go into the red. So that is not going to help the issue. The government has to come out with some kind of incentive for them, like we have the incentive for the agriculture people, interest subvention of 3%, 5%. Some kind of interest subvention can be given to these MSMEs also up to a particular level, maybe 5 crores, 10 crores limits or 50 crore limits, whoever is having. Some kind of an incentive has to be given. Otherwise, I think at this point of time, the MSMEs are finding it extremely difficult to really not only service their interest, but even to service their installments. And many of them are hesitant to take fresh loans because they feel that it is going to be an extra burden on them, because at this point of time, they are not very sure whether they will be in a position to generate that kind of a demand to ensure that everything they're able to have, because they don't want to increase the inventory, frankly speaking. Because if the inventory increases, there is no guarantee that it is going to get sold out, because nobody knows even today when this pandemic is going to get over, when the entire lockdown is going to get completely lifted out. That is a major issue. Agri, yes, this time, luckily for the people, the monsoon has also been good. And so the agri has not faced so much of problem. That is why if you see the GDP, there is a only sector, agri is the only sector which has shown a growth of about 3.2% vis-a-vis any other division which has shown absolutely a negative growth. And yes, there's a lot of other things which can be done to help the MSME is maybe that, the TRED platform, which has been started by the government, TREDS, TREDS, that has to be improved to such an extent, number one. Number two, see the GST amount which has to be given, many of them have still not got the GST amount back. The government is also, central government is telling the state government you borrow it and all that. But the major defaulter for the GST refunds to these MSME is the government of India. Unless the government of India ensures that the GST amount is paid back to the MSMEs well in time, they are going to face a liquidity crunch, which is going to be very difficult for them to handle at this point of time.
Yeah, true. Let me take another question that has come. The question is from Radha Rangarajan. Thank you, ma'am, for asking this question. I think it's interesting. Don't you think decentralization of banks, which is much more preferable than merger of banks, as it is easy to have effective supervision and control on small units than the larger ones? That's the first question. Second question she asks you is, and don't you think that the decision of the government to merge bank is wrong one? I mean, that could be debatable, but there are two questions if you could take up, ma'am.
See, as I said, merger of the banks was definitely required. But of course, as I said earlier, the government had given the liberty to the banks board to decide which of the banks to be merged. But ultimately, since no bank was taking a decision, because every bank did not want any other bank to get merged with them or merge with some other bank. So there was a lot of hesitancy in that, and that's where the government forcibly had to come and then merge banks. Because as I said, unless we have really big banks in the picture, we are not going to be economically strong enough in the international market to be reckoned with. So that was a major reason why the banks had to get merged. There cannot be, only thing I agree that there has to be only one control. Either the Reserve Bank of India is the only one who should be in charge, like they are in charge for the private sector banks. There should not be a dual control with the DFS coming in, because the question is for anything and everything, the banks are not able to take a decision at the earliest because they have the fear at the back that for anything and everything, they are going to be held accountable. Secondly, if you say because it is under the DFS or the government directly, lot of work is being done by the public sector banks, which are not economical, which not only are not economical, which is a drain on the bank's resources. Banks are not expected, banks can be a social facilitator, but they have to get paid for it so that they are also, their commercial decisions can be then good enough. Like private banks don't have that kind of an issue as much as the public sector banks are having. But bank merger had to take place. Only thing is, yes, which bank had to get merged was a discretion which initially the government had given to the banks. Since nobody took it, they were forced to do it. And they have basically done it, and main criteria was that the IT platform in which the banks are functioning have been kept in mind so that the customer ease of doing business is not affected, because otherwise one person doing from Finacle and one person doing from iFlex, it would have not been able to merge the technology platform. That was a main criteria which was taken into consideration for this kind of a bank's merger.
Actually, she asked whether would it have been better to have decentralization, so smaller banks, so better.
That's something. Then you will not, if you're going to have a decentralization, you will not be in the economy. That's something.
Yeah,
As
correct,
it is, we have only one state bank which is 55th in the world. So unless you have big banks in the world's economy, smaller banks will not be able to take the risk, will not have the risk appetite to lend. We already have small banks. Actually, the Reserve Bank has given permission for small banks. So a lot of small banks have come up now. If you see Bandhan Bank has come up, it's not a small bank, of course. Bandhan Bank has come up. You have this lot of small banks. Payments Bank have come up. These banks are there, but they will be able to basically lend only to the micro. They'll be able to lend more to these agri and more to smaller MSMEs. But for lending to big corporates, but for having international exposure, for having the foreign exchange guarantees being accepted by the international banks, you need to have large banks, and that is the reason. Smaller banks, even today, the permissions are being given by the Reserve Bank. The Reserve Bank is not sorry. Like you have ESAF Bank. All these are small banks which have come into play in the last 3-4 years time.
Yeah, thanks. So sorry, ma'am, I had to mute and unmute because there's a noise going on, the immersion noise. So you may find a little time lag. Sorry about that. So the next, this one is a direct question to you, ma'am. And the question is being asked by Tyagarajan from Chennai. Yes, Tyag, please unmute and ask.
Good evening, madam. The topic is around the transforming banks into for the 5 trillion economy, which is very important for the banks to play a role. The question is to handle such a, let's say, Himalayan kind of target. As you rightly said, the target has to be relooked at. The question is, do banks have enough capacity building, or are there capacity building that banks can handle such a voluminous transactions of trade and commerce on their platform? And are they ready? What is your take, man?
Yeah. As far as banks have the capacity, capacity building capacity, there is absolutely no problems. Because as I said, all the banks which have got merged are all basically big banks which have got merged. So there is no problem with the capacity building, capacity utilization and all that. The IT platforms of all the banks are excellent. There is no doubt on that. The capital is sufficient and the government has also given further capital. Secondly, if you notice, most of the banks have gone on their own to the market to raise capital at this point of time. In fact, one of the suggestions which has been given in the Monetary Policy Volume 2, where Mr. Sajeev Sanyal was talking that day, was saying that one suggestion which they have given to the government is a netting of trade. Like basically, see, Punjab National Bank and say Syndicate Bank, both of them, like Punjab National Bank has an exposure of 100 crores on Syndicate Bank. Syndicate Bank has an exposure of 90 crores on Punjab National Bank. Both the banks are providing their capital to the extent of nearly 190 crores, whereas actual exposure is only 10 crores. The suggestion which has been given to the government for the government to take it up is, if this can be netted off and only 10 crores is to be really provided for, a lot of capital will get released, which again will help the public sector banks to go, not only public sector banks, even the private sector banks, to go and lend much more in the market, because that will be really more beneficial. And secondly, the banks also want, the economic advisors have also suggested, along with the banks, the credit debt swap market in the country should really improve, because that will help the bond market and that will help the customer not to depend too much on the bank credit. He has a much better option of going into the bond market at a rate which he is more comfortable at. But banks do have the capacity, and I think banks will be playing a very, very major role in the government achieving the 5 trillion economy, depending on which date they are going to change it.
Thank you, Tyag. Thank you, ma'am, for the question. So now let's talk about two things, ma'am. Two very important things: export earnings and imports. Okay, so let's take the exports because that's where we earn, so we should give the importance. So export earnings is a thrust area for the 5 trillion economy. There should be no doubt about that. What should bank do to complement policy thrust for improving ease of doing business and providing access to capital, so that these export earning units are in a better position to earn those dollars?
See, if you see the total exports from India, during the year 2019 was around $528.45 billion in the year 1920. And the imports were at $598.61 billion. And till July 2020, which is the 4 months, the figures which have come out, the exports are at 148.82 billion and the imports are at 127.76. The imports seem to have come down a little less. The ministry has done a lot of things, and one of the things which they expect the banks to do is to lend much more to these exporters. Not only lend much more to the exporters, because the small exporters, not only, as I said, require this thing, they need guidance as to how to apply for their duty drawback. And the banks have to now start looking at cluster financing, especially for the exports, and the special economic zones for the exports, because that will really help the exporters also to get better rate of interest. Though there is a concession in the rate of interest which are given to exports, but even today the rate of interest given to them is not in line with what is given in the international banks, because especially in China or in Bangladesh, because that is the reason why their exports are cheaper than our exports, and that is where we are losing on. So banks have to go back to the drawing board and see how much of benefit they can pass on to these exporters to enable the exporters to do a much better business, which in turn will help the economy of the country. And we have to guide these exporters also, because we have to do a lot of hedging for these exporters. So we need to have the division which will be able to guide them how to do the exports, how to do the hedging, because most of the exporters hesitate to do the hedging thinking the dollar will go up. They have to be guided that there are chances of the dollar coming down. So both the importers and exporters have to be guided for hedging, and many things have to be done by the banks, right from start of the business, how the business has to be done, who are the customers who they will be able to deal with. I think all these things the banks have to take into consideration and guide these exporters. Only then we will be in a position to reach the 5 trillion economy.
Okay, so that's on the export earnings. Let's look at the import side. So there is a question come to you. Now that imports from China are not there, and with the attraction of Atmanirbhar concept, is it not that there is more scope for MSME to grow ahead?
Yeah, that is what I said. I agree with him very fully that there is a lot of scope for the MSMEs to go ahead. But only thing, again, we have a problem in our country is a quality control. We have to be very sure that whatever we are manufacturing should adhere to the highest level of quality control, because only with that we will be in a position not only for the domestic consumption, but even for exports. But this is definitely a very good opportunity, with not only the imports coming down, with the majority of the international countries not wanting to import from China. We also have that ability to export to countries, to those countries from where China was, from whom they were importing. So we have that opportunity, but we have to improve our quality. Many times in India, we find that the finished product which comes out, there is a lot of quality control which is not being adhered to, especially like your child labor. I mean, because when we are going to export internationally, you have to take in consideration to all these things, that no child labor is used. Many things which are there have to be taken care of, but it is a good opportunity for the MSMEs and the small sectors to really take advantage of this position.
Yeah, true. I have a very good question, ma'am. Okay.
Yeah.
So it says that the single biggest constraint, and this is something people don't want to talk, because in our country the judiciary is considered to be a holy cow. But let's take it head on. The biggest constraint to ease of doing business in India is the ability to enforce contracts and resolve disputes. This is not surprising, given that there are close to 3.5 crore cases pending in the judicial system. A case clear, if you want 100% clearance, we will require 2,279 judges in the lower courts and 93 in high courts to get rid of all these 3.5 crore cases. This is, I think, a very good question, because if such a lot of disputes are there, people are not wanting to do business. Your thoughts, ma'am?
Yeah, this, in fact, if you see the ease of doing business, though we keep saying that, India has really come up and we have improved our position, but there are certain things like the judiciary system, the enforcement of contract, we are still much at the lower level, as low as I think 150 or 160 out of 180 countries. We are very much at the lower level. And one of the causes is that 3.5 crores of cases which are pending. That there has to be a debate on this, and the government has to seriously think of not only judiciary, increasing the strength in the judiciary, but also a quick disposal. Because most of the cases, if you see, even I remember reading a case of the CBI who was, finally closed a case of a Rajasthan Raja who got killed after 35 years. I mean, it's ridiculous, I think, to say that after 35 years, you close a case by saying so-and-so was guilty or so-and-so was not guilty. So we have to improve the prison reforms, the judicial system have to really improve to such an extent. Only then we can definitely do ease of business, which overall will come up, because other.
Sorry, ladies and gentlemen, I think we lost her. Just have patience. Maybe she'll come back. Her network is down, I think. Though we're almost to the end of our show. Just a minute. Let's see if she can, if Madam can come back. Yeah. Sorry, Madam, we lost you.
Yeah. Something went wrong. Now can you see me?
Yes, I can. We can hear you and see you.
Okay.
Yeah, go ahead, ma'am. I think we were at the point of saying that so much of cases were pending, and then we lost you.
Yeah. See, about 3.5 crores of cases are pending. 3.5 crores of cases are pending. And as I said, unless there is a reform in the judicial system, not only just appointment of the judges is not going to help. There has to be a timely disposal of all the cases, because we see the cases take, lingering years after years, whether it is a civil case or whether it is a criminal case. There are so many people under trials who have not been able to come out because the case has not been listed at all. That is one of the major issues for ease of doing business, and that has to be there. We have to ensure that the judicial system gets a better disposal rate to do it.
Okay. Ma'am, if I have your permission, can I take a couple of questions?
Sure.
Okay. So Harish would like to ask a question. Harish, keep the question short because you already passed the 7 o'clock mark. Harish, go ahead.
Yeah. Good evening, madam. I mean, my question is, how much of a systemic overhaul has to be undertaken across the wheels of each of the, facets of the economy, that's banks, infrastructure, industry, logistics, etc., so that, the world cannot ignore us, both as a manufacturing destination as well as a market destination, just like what China did, right? Today, China cannot be ignored. So what are the, things which are really required at a macro level?
Yeah, see, quite a few things are required. As you said, we have to do a lot of work in order that we are a force to be reckoned with, like China is being reckoned with, for which we have to ensure that each and every area of ours, whether it is a manufacturing sector or whether it is a service sector, they have to be given the thrust which is required. For which, supposing, like say, we have been talking of Atmanirbhar scheme, we have been talking of, MSMEs getting the better, output, better productivity, but major things like, the land acquisition. There's so much of issues when a person has to acquire land in order to set up his business. Secondly, there was a discussion that we do not encourage entrepreneurs to such an extent as Singapore or other countries do, because the ease of getting licenses, the ease of doing business in those countries are much better than what we have in India. Third, there was a discussion also that if you really see for an exporter, if he has to export, he has to keep at least 10 to 12 days additional even for exports, because even the economic survey, they have studied it, stating that from Delhi, if a shipment has to go to say Los Angeles or to New York, the time taken at the customs, many places takes about 6 to 7 days even for getting the shipment cleared. These are all kinds of problems which really hamper the growth, because 7 days of manpower, 7 days of loss of interest, 7 days of problems are there. Secondly, the logistics. We do not have many places which are connected. The connectivity issue also has to be done. So many issues are there, which I think the government is aware of, but not that much of thrust has been given, though we have built a lot of infrastructure, as we said there. Now, of course, the government is planning to do a privatization of the airports. Hopefully that will help in the better maintenance and better connectivity. But more has to be done by the government, and more thrust has to be given for logistic infrastructure, especially for the manufacturing sector, and how their products warehousing has to be done. A lot of places where even for the agri, if you see, there is no sufficient warehouse to keep the goods for them to sell it at a later stage. Cold storages, warehouse facilities, all these facilities have to be considered in the next few years if we really want to achieve a 5 trillion economy.
Thank you, ma'am.
Thank you.
Can you hear me? Yeah, okay. So, yeah, I think we heard a lot about the government has to do a lot. I don't know, every sector, I think the government has to do a lot of work. The poor Prime Minister, I don't know how he'll handle this. So, my final question to you, ma'am, is you talked about autonomy. So, a key part of the bank, if for the 5 trillion, is to give autonomy, is what you emphasized. Give us a couple of areas, especially in the credit area, where you feel autonomy is must.
See, what I'm talking of autonomy, even in the credit area, is that, see, today also, if you see, Reserve Bank has now made an announcement that, so much of frauds have taken place in the public sector banks, in the banking industry and all that. See, we have to understand one thing, that what you are talking as a fraud today was a commercial decision taken 5 years back or 6 years back or 10 years back or 12 years back, whatever it is. So you need to give that kind of an autonomy, that when a decision is taken at that point of time, subsequently, if a credit goes wrong, please do not blame anybody for that matter. Today, many of the people do not have the courage to give much of credit because of the simple reason tomorrow they're going to be held accountable. And we have to understand that autonomy in credit decision, I'm not saying accountability should not be there. Definitely accountability has to be there. But you have to give him the autonomy, not keep insisting that he should not, do this loan or you should not do that loan. The freedom to choose a customer, the freedom to do the due diligence on the customer, taking care of all the risk mitigation aspects, taking care of the risk appetite of the bank. The government or the Reserve Bank of India should give full liberty to the banks and not restrict that you should not go beyond this particular amount to this lender, not go beyond this particular amount to that lender. I think more autonomy has to be given to the banks in these kind of discipline, so that they can give a better quality credit to the customers who really needs it.
Thank you. So my final question to you, ma'am, is is it 5 trillion economy possible or not possible? And if it's possible, by when? What is your guess?
See, 5 trillion economy is definitely possible. It's not that it is not possible. But the time period in which we are looking at 2024 may be different. Okay. As I said, they have to go back to the drawing board and decide whether it has to be 2027 or 2028. Okay. 2024, I mean, at this point of time, I don't think anybody should stick to that point that 2024 we should achieve at 5 trillion economy. I think it's, living in a fool's paradise.
Okay, thank you. So that's the final answer and the final question from me. Thank you, ma'am. Ladies and gentlemen, I hope you enjoyed this session, this evening session. We started from today. I hope you enjoyed it. It was, to me, it was very informative, and I really enjoyed listening to Srimati Latha. My final observation for sign off is that, considering the heterogeneity of the problem every sector or industries are facing, the Indian economy will take time to adjust to the new normal. Nobody predicted COVID so that they could have taken measures. Moreover, measures taken to move the economy forward would take time to unfold fully. We definitely have to keep moving forward, but also need to be patient as any steps taken in a haste might not give us the expected result due to uncertainty prevailing in the economy. These are my final thoughts. Ladies and gentlemen, please join me in thanking Srimati Latha coming over and spending a lot of more than an hour with us and answering all those questions wonderfully. Ms. Latha, thank you so much for coming, spending time with us and telling us all about the 5 trillion economy is possible or not. Thank you and have a good evening. Ladies and gentlemen, tomorrow Manoj Kumar Nambiar will be talking on boosting microfinance for resurrecting the economy. Srimati Latha, thank you so much. Participants, thank you very much.
Thank you, Mr. KK. Thank you, Mr. Vivekananda, and thank you, Mr. Mani Mamalai. And a good evening to all of you.
Yes, good evening to everyone. Thank you very much. Bye-bye.
Bye.